Most self-storage investors fail before they even start. And it's not because they can't find deals, it's because they can't get them funded. If you have ever struggled to raise capital or raise money for your self-storage deals or get bank financing, this video is a must watch. Inside today's video, I have an exclusive sit-down conversation with two good friends of mine who are experienced self-storage owner operators that between them and myself, we have closed north of 18 storage deals that are under contract for two more. We've raised millions of dollars and gotten millions more for bank financing to close our self-storage deals. And more importantly, what we're going to break down in this video are the biggest mistakes that first-time storage investors make when trying to get funding, how to approach banks the right way so that you don't get rejected, and if you do, what should you do then? How to raise private capital on easy mode, even if you've never done a deal before, and the mindset shifts that you need to confidently get your first or your second deal financed. So if you're feeling stuck, feeling like funding and financing a storage deal is your biggest roadblock, this conversation is going to be a game changer for you. Grab a notebook, take notes, pay close attention, because what you're about to hear can be the key to getting your first or your next self-storage deal funded. Let's dive right in. All right, with that being said, Cynthia, if we can spotlight, I think we should have the ability to spotlight two people. If we could spotlight our storage ambassadors, Andrew and Kenny, on here so we can kick off this roundtable discussion. And guys, rather than make this, like, I'll facilitate the roundtable conversation, but I would love to bring you guys and your voices into the conversation as well. So I'll kind of kick things off with Andrew and Kenny because I have some specific questions I want to ask them. And I want to make sure that we touch on the questions that you guys wanted to ask them. I may or may not be able to understand my own handwriting and ask them. So if that is the case, raise your digital hand so we can bring your voices into the conversation. Okay. With that said, guys, gentlemen, thank you. Appreciate you hopping on here. You guys have a wealth of knowledge. Combined, you must have, I don't know, north of 10 facilities probably between you guys in terms of experience, or somewhere around there. Hundreds and hundreds of thousands of square feet of storage. So you guys are more than qualified to be able to answer any and all these questions. And I might sprinkle in my thoughts here and there as well. With that being said, one of the first questions I wanted to ask you guys relates around mindset. And you heard fears, concerns, doubt. And as you guys know, unless you're able to overcome that mental barrier, it's going to be difficult for you to get these deals over the finish line. Or what's happening, I think, in some people's cases, is you're self-sabotaging. They're not doing the work they need to do on the front end because there's a fear associated around being able to get these deals funded and financed. So with that being said, what's the biggest mistake that you guys see first-time storage buyers and operators make when it comes to how they approach getting these deals financed and funded? So we're beyond the point of like finding a good deal, but once they do, what are some of the mistakes, hiccups, or challenges that you're seeing people face when it comes to getting the financing needed for these deals? And whoever wants to go first.
Andrew, you want to kick it off?
Sure. Yeah, I mean, I would say that the first mistake, I think, is letting the financing hinder the finding. Because I think if you have question marks in your head, how am I going to fund this? Or, we all have fears, but you were mentioning self-sabotage. You may be looking for a deal, but you're kind of afraid to actually get one under contract, because then it's like, well, what then? So I think just having that confidence, getting things in place, that a lot of the stuff that we talk about today about funding starts with planting seeds now, with whatever step you're in. And I think trying to alleviate some of those fears so that that's not keeping you from getting something under contract. I would say that's a big one. On the flip side, I guess the other thing would be waiting until you have it where you're trying to close, and then you're trying to pull together everything right then. So yeah. I'd say both ends of those spectrums are kind of paths that I see, but I'd say more often it's the fear of failure that prevents you from just getting something under contract and forcing you to figure out the rest as you go.
I believe before we open it up to Kenny, I believe, Wes, correct me if I'm wrong, I think it was you that mentioned that very thing last week, right? I think it was Wes that was very, to his credit, open and honest, that it's like, there's a little bit of a mental barrier around financing and funding. So that might be slowing my efforts down to finding them because you don't want to encounter that pain. right? Like Tony Robbins talks about, like humans are conditioned to avoid pain and seek pleasure. And so if there's an avoidance, if you associate, I can't get financing or funding, or there's pain around there, you're going to avoid that. And that might self-sabotage, prevent you, to your point, Andrew, about going out and doing what you have to do.
And I think that also limits your buy box. If it's like,
sure.
What can I do myself with what I know right now? It may be only a 50 grand down payment. And so that, like, I'm only going to focus on something with a 50 grand down payment, where by expanding your options, you can actually have a bigger buy box and have opportunities for a better deal potentially.
Yep. Kenny, what are your thoughts, man?
I agree with what Andrew said. You got to nurture your funding avenues, whether that's investors or banks. What I mean by that is, if it's investors, who's on your short list, right? When's the last time you talked to them, and like what kind of deals would be good for them? Like I was explaining to our breakout group, people using retirement funds may have a little bit different strategy, since more of a longer term investing, than people using their actual cash, and they need a return on that cash day one. Well, you're not going to give a ground up development deal to someone that needs a return like starting in 60 days. So nurturing that list, when's the last time you talked to them? What kind of deals would they be interested in working that list? And then the next step of the funding is, who are the banks that you're going to be potentially working with? And are you staying in tune with what kind of deals that they are willing to lend to? Like, I have maybe 10 banks that I correspond with that keep a pulse on what they're willing to do, what they're looking at. Like, for example, a heavy value add. Some banks or are going to use projections and lend off a blend of what they're doing today and what you're going to project, projections for the facility going to be once stabilized. And they might come up with a number in between that. Other banks would just want to lend off what's going on now. So I had a banker call me today that I've been cultivating and maintaining, and I asked that projection question to them just so I know, okay, in my mind, yes, they like projections and they're going to willing to lend off it, where another bank I talked to doesn't like projections. So you got your people, your individuals that you're cultivating, and then you got your banks and maybe other types of funding that you're continuing to cultivate. So that way, when that deal comes around, you're like, all right, it's going to fit the mold with this bank, and I'm going to fit the mold with this potential investor, and you're off to the races. And then the last thing, be prepared with your bank when you present that package. Don't make sure everything's buttoned up and done. You got your Google Drive, it's got your business plan, all your documents, and it's very clear on exactly what you're going to do, and the ask from the bank or the ask from the investor. Not like, hey, I'm just looking to raise money for this deal. Throw them some stuff and say, what do you think? Well, an investor may not spend the time to dig into your deal and put the energy and effort to potentially fund it. I want to know, tell me what you want, and I'll let you know if I'm going to write the check.
Yeah. No, that's insanely valuable. We're going to have to like cut this up into short clips, like just these little segments. Just the Q&A is insanely valuable. Guys, I hope that you're actively listening and just jotting down some notes and not relying on AI to take a summary, because the answers to that one question can help unlock something for you to be able to go get the funding and the financing. Especially like one of the things that Kenny just shared is, don't just go, hey, I'm looking for money, but you got to be specific. Preparation breeds confidence. That's something I've said in the past. Preparation with your business plan, preparation with making the phone calls to banks to see what kind of appetite they have, how they view storage, do they take pro formas? Like all that prep work is going to give you confidence to go pitch a deal when you have it, right? And I think Andrew brought up, I have been guilty of saying in the past that if you find a really, really good opportunity, there's no shortage of capital. And I've also said that you're making your job more difficult if you are waiting to find the financing when you need it, right? Dig your well before you're thirsty. Kate, before we move on to the second question, rather than read it, it's better if you just unmute yourself and you can ask it.
Yeah, Kenny, could you give some examples of just like what you do to cultivate the relationship with a bank, for example? Like if I'm not sure if you always invest in your area, but what if you're, kind of going into a new area? How do you kind of cultivate that where you kind of hear from different bankers what they're looking for? Kind of how do you keep that going? What do you do?
Yeah. So I share this with our breakout group is I like to get a pulse on what banks are doing. Some banks at times are more aggressive than others when it comes to rate and terms, right? Rates went up, and so we got to stay in tune. How are some banks raising rates faster? Now rates are starting to come down. Some banks are more aggressive when it comes to rates. So I always start with staying in tune with them on their interest rate in terms and some things that they're doing. And that's kind of how I continue to stay in touch with them. Hey, just checking in with you, as they underwrite deals, where do you think you'll be at today on this or whatever? And just, how's everything else been going? They'll maybe ask me a question like what I'm seeing or whatever, because I'm sharing what I'm kind of getting in the market. So I try to bring some value that way with other banks are doing. Just once a quarter, maybe check in. And then if you are looking at specific areas, you'll be surprised. Some of these small banks will lend in multiple states, although they're located in one particular area. As you build a relationship for their quote clients or the right customer, they're willing to go wherever you want to go. They just don't advertise it. So that's another thing is like what they can do and where they can lend and just staying in tune with that. So that way, when you're underwriting a deal, you kind of know what to plug in for the underwriting when it comes to rate and terms that you're doing. So just quarterly check-ins, basically.
Okay, thank you.
Yeah, I would also say in terms of investing in other areas, my preferred lending solution is when I get a facility under contract, like I'm immediately reaching out to 5 to 10 banks that are within 3 miles of that facility. I'm getting in touch with a vice president of their commercial lending or somebody in the commercial lending, letting them know, hey, this is what I'm doing. This is the facility right up the road from you guys. Again, like Kenny said, getting all the information, the terms, the rates, what they can give me so I can compile a kind of comparison list. But, just calling them throughout the process. Anytime I get an update, okay, we just got X report in, I'm going to call all 7 of those bankers and say, hey, we just got this done, and try to move that process in relationship along. And that's one of the things when I go do my due diligence, I'm inviting those bankers to come look at the property with me. I'll walk it with you and tell you what I'm thinking. I'll try to meet them in their office, just so it becomes a relationship and not just somebody that you're sending emails to.
Yep. Yeah, I could not agree more. Don't be short-sighted. And what I mean by that is, yes, you're trying to connect with the right bank to get that particular deal that you're working on funded. But those investors that think long-term are thinking the right way, because you're going to reach out to 10, 15 in Kate's case, I think, Kate, you reached out to 23 banks, right? That's incredible because you're only going to work with one of those banks, but you're planting seeds now for the next potential deal, right? And now they know Kate, they know Andrew, they know Kenny, they know Dwayne. It's a different conversation the second, third, fourth time around versus you just cold calling and speaking to somebody for the first time. And keep in mind, a bank makes money by lending money. So they want to earn your business. So focus on the relationships. I always stress to bankers that I'm looking to build a long-term relationship. Those are trigger words they want to hear. And it also happens to be the truth. So guys, if you have questions, raise your digital hand. I got some questions I'm going to ask here. But again, I'd like to make this as interactive as possible. Andrew, Kenny, for those people that haven't yet bought their first facility and don't have a proven track record, so to speak, how can they go about building up credibility in the eyes of bankers, investors, private money lenders, etc.? Like, how can they start to position themselves to give these people confidence, even though they haven't yet bought their first storage facility?
Yeah, I think you're on stage at certain times whether you may know it or not, right? You may be around investors, whether, I think Kusky shared like at a gym or something, he didn't know it, but he was on stage talking to someone, explaining what he did, and that could be a potential investor. So just sometimes be aware of your surroundings, because you never know where an investor could come from, even calls like this, right? How you're showing up, how you're asking questions, how you're interacting. I think that's one step to prepare yourself that sometimes, people miss.
How I just put that in the chat. How are you showing up? That's a great question. Everybody should ask themselves. How are you showing up? And by the way, I like that framework of like thinking like, am I on stage right now? So, Andrew, what are your thoughts and insights on this, man?
Yeah, I would say one, I'm trying to think of the book. I think it's Flip the Script by Oren
Clough.
Yeah,
I think
that's somewhere. The one where he talks about just being comfortable, coming up with like a 2 to 3 minute like way of expressing what you do that uses terminology about whatever it is that you specialize in. And so I would just say, one, not to be intimidated by the banks and the lenders. They are not experts in self-storage. They're experts in lending. And so part of it is just the confidence that you bring when you're talking about it. So in a sense, if you've done your homework, if you have a business plan, just present it with confidence and just if you can show them that this is the property, this is my plan, this is what we're doing, and you can do that in a way that convinces them that you do know what you're doing, even if you don't have a background of doing this for 20 years. If you present a plan and, like Kenny said, have a good business plan that's laid out, that will check a lot of boxes right up front. That when they see a well put together business plan, that you are well articulated and can use some of the terminology that, I mean, if you guys are in this group, you're talking about dynamic pricing or, tenant protection or just the security features or whatever it is that gives them confidence that you know the business, even if you don't own it. Just by presenting them with that, it puts them at ease and they don't have to feel like they're filling in the gap. If you give them that right up front, then they already have a good view of where you're coming from and that, okay, this is somebody that has thought through this. And it's not, they get people asking for money every day, all day. And some of the people are just like, hey, this morning I decided to open an ice cream shop. Hey, like my brother said I should start this business and I want to start this is not something that you guys woke up this morning and wanted to do. You guys have put in the time. You guys have been in this. And so have that confidence when you have the conversation with this person. They may have done a self-storage deal in the past with somebody, but they're not running the business. They don't know this business. And so just be confident in where you're coming from in the due diligence and the hard work that you've put in to get to this point and just show that off.
Yeah.
Yeah, I would say to piggyback on that, you have something that the banks and the investors want. You have the deal, right? Alex said before, the banks need to lend money, right? They take in deposits and they pay real low interest rates on deposits and they lend money out. That spread is how banks make money. So they need to lend money. That's why they hire these business bankers and they have lending goals to go out there and lend money in the community. So you have the deal that the bank needs to lend on. And then the investors, right? Everyone's watched the stock market the last 5 days. Who would you rather be in the market or would you rather be in a consistent real estate deal that's paying returns? Also, depending on where you think the market's going to go or the economy over the next 6 months, where would you rather be? You have a deal that investors and an opportunity for investors that they can place capital with you in an alternative investment versus the stock market. So you have something banks want and investors want.
Yeah. Having that mindset that you don't need them, they need you, puts you in a different place already, right? I think Andrew referenced the book by Oren Klaff, Flip the Script, which is a phenomenal sales book, by the way. And that book talks a lot about framing and positioning and communicating with confidence. So that's like a common theme I'm seeing so far through these first couple of questions is that word confidence keeps coming up. And don't overthink it. Put yourself in the position of a banker or a lender. If you had money and you were thinking of investing it into somebody's deal, how would you want that person to show up to bring, Kenny's thoughts right back into the conversation? Do you want to hear from somebody who's confident, who has thought out of, has a business plan, has thought out, has a plan to increase the revenue, is accounting for what could go wrong? How are they going to mitigate against those risks? So that preparation is going to feed your confidence going into these pitches. All right. And by the way, don't even look at it as a pitch. You're presenting an opportunity. That's genuinely how I think about it. And you're not looking for a bunch, you're looking for one person potentially to invest, or maybe a small group of people. Guys, what are some simple, effective, easy ways for people within this community to start having conversations with, I think it was somebody I wrote down mentioned hey, if I was going to fund the deal in the next 90 days, I think it was Rob said, hey, I'd go to my phone book or my contacts on my phone. How can people dig their well before they're thirsty, essentially? How do we bridge the gap and even introduce these conversations?
Yeah. I mean, I think it's all about planting seeds. So the earlier that you can do that, the better. Even if all you're doing right now is just telling people, this is what I'm doing, this is what I'm looking for, so that 3 months from now, when you have something under contract and you're going back to those same people and saying, hey, the thing that I told you I was doing, I now have, and you're already showing credibility that you're doing what you said you were going to do. And so just planting seeds and then keeping people in the loop of what you're doing, what you're looking for, so that when the time comes, there's something there to harvest. You can't wait until you have the deal to start those conversations, but just having the conversations that, hey, I'm pursuing this self-storage thing. I'm really excited. This is why I like self-storage and looking to partner with investors in the future. So, if you know of anybody, just send them my way, and, just that up front. And then, the people that are in a position or curious, they're going to ask more questions. They're going to say, tell me more. You won't really have to pry it out of them. So it's really just trying to connect with the right people. And so just telling everybody what you're doing and what you're looking for.
Yep.
Yeah, I would say, just to piggyback on that, just have your short list of investors, and then, I guess you can never have too many people on your list, and just cultivate and maintain that relationship in that list. So that way, when opportunities arise, hopefully you make a few phone calls and a few emails, and then you should have what you need potentially for that deal that comes about. So it should be a pretty easy lift. All the hard work comes in prior and through the maintenance of those relationships. That way, when the deal comes, it's an easy phone call, text, or email, and you got the capital.
Yeah. Be the type of person that follows through and does what they say they're going to do. I think Andrew alluded to that at the start of his answer. Is if you've been planting seeds and telling people that you're pursuing storage, and then you actually come back and you say, I now have a storage facility and here's an opportunity, that automatically separates you from most that talk about it but don't be about it, that don't do it, right? So be the type of person where if you can pick up the phone or present an opportunity, they've already underwritten you as the person, you as the operator. Now it's just a matter of, does the deal make sense for them? So I think just being within integrity of yourself and your word is foundational. It's huge.
I'd say, going back to somebody had asked a question about what makes your deal attractive.
Yeah, I just highlighted that right now on my iPad.
Yeah, I mean, I think just probably 70% of the people that have invested in probably more than that have invested in me, not the deal. And so, like, it's going to be people that are investing in you because of who you are, because of their relationship with you. You will get some people who just, oh yeah, I've always wanted to invest in self-storage, and that sounds cool. But I'd say most of your investors are going to come from your relationships and people investing in you. And so, and I think even if another thing I'd add, when before you have a deal, and you're like, well, what do I tell them? Other than what you're doing, you can use deals that have fallen through the cracks or that you didn't close as opportunities to, hey, if you want to sit down sometime, I could show you one that we were looking at that didn't end up panning out, but kind of what we were looking at. And you could do like a kind of like a pitch with them of, hey, this is what we liked about the deal. This is why we ended up walking away, but this is what we were hoping to give our investors. And this one didn't work out, but the next one that comes around, we can, I'll be sure to let you know.
Solid. Kenny, do you have any thoughts on that? Because that question came up several times when we got back from the breakout groups. It's like, I think it was Gabe that started off like, hey, how do we, and I realize this is a loaded question, right? And the answer is it depends, but essentially the heart of the question was, how do we structure deals in a way that's attractive to everybody involved, whether it be a private lender, an equity partner, a bank? Again, I realize that's a kind of up in the clouds, very general question, but what's the mindset behind structuring deals that are attractive to everybody?
I think it has to be a win-win-win relationship, whether that's you as the GP or the owner or operator, whatever it's going to be. You have your investors who are bringing in some capital. You have potentially the bank, whether it's a bank or not. It has to be a win-win relationship. There's probably some big name operators out there that advertise on Facebook or whatever online that are big institutionals. They raise money and they get acquisition fees and they keep their machine running because they're doing deals, right? And sometimes that benefits them, but if the deal's bad, right, that's not a win-win-win win-win relationship. They're doing deals because they get those fees up front, the acquisition fees. Then they need to go get another deal and get acquisition fees. Well, if they're doing bad deals, your investors are losing out, right? So you need to make sure that the deal, the structure helps everyone. Like you wouldn't want to do a deal that, oh, I can only pay the investor 3%, right? And then all the risk is going, we're structuring it so that way, all the risk goes on the investor. Like just however you need to do it needs to be a win-win-win for everyone, right? And then there's different levers and ways to structure it within the deal that you can massage it to be a win-win-win. It might not be a cookie cutter structure. And that kind of goes back to, what are some of your investors' goals, long-term, short-term, equity versus no equity. So you can kind of plug and play investors based on like, all right, well, it only works if I, take on a loan and give up no equity, or it only works if I give up equity, but I can't pay a preferred return right away for the next 18 months until we, do X, Y, and Z. So just figuring out where their risk tolerance is and what they're looking to do. And then what levers can you pull? And then how does everyone benefit and win from the deal is kind of what my answer would be.
Yeah, you covered a lot there. Remember how you guys have heard us say meaningful conversations with key people? Part of what makes a meaningful conversation with a potential lender is finding out what's a deal to them. What do they value? Is it cash on cash return? Is it IRR? Is it like, what are the metrics that they look at to evaluate what's a good opportunity for them, right? I think it was Kenny or maybe Andrew that said, hey, if somebody has self-directed money, maybe they don't need cash today. They're just looking for the growth of that long term. So all that information can be used to structure the deal in a way that it makes sense. And part of it for me is kind of running the different scenarios. I don't want to say trial and error, but just like a piece of the puzzle. Like, hey, does it fit like this? Could it fit like this? What if we did this? One of the questions around fear that I'll kind of tie into this question was, or how do we structure these deals in a way that makes the investor want to invest in you? I think the first is the mindset that all the money is out there and that if you find a really good deal, it's just a matter of figuring out a way to make it work with the people that you've been building relationships with. So have trust and confidence that the money's out there. It's just a matter of figuring out how does it make sense to structure it based on what this particular investor wants and values. Obviously, the deal's got to make sense for you, so don't price yourself out of it. So it's just running different scenarios and looking at it like a piece of the puzzle.
Yeah, it's generally a long-term game, right? So if you have an investor and you do one deal, right, and it works out, and you communicate through the whole thing, it builds that relationship, it builds that credibility. Chances are they're going to reinvest with you again in the future. So you start the relationship now, but they could be your investor for the next 2, 3, 4, 5 deals, and then what is an investor going to do when they talk to their friends and family about finances and what they're doing? They might say, yeah, I just invested in this deal with Andrew and it's paying out, 10, 11%. We're consistently get it. And they're over there griping about the stock market. Well, they're going to be like, well, tell me more, right? You're getting cash flow right now. And I'm losing money in the market. So it spreads once you start this snowball going.
1000%. I would echo that your first deal, your first working with an investor, a bank, a lender, generally speaking, is going to be the tough one. But once you do that, it's almost like the doors of the dam break a little bit. And then you share with others. Like when I pay back lenders and investors, like I share, hey, I'm excited to be paying this person back. And people are intrigued and they're curious. And hey, how did that work? And now you're building a track record little by little. Guys, I got some more questions to ask here. I realize I want to be respectful of Andrew and Kenny. Guys, are you guys good if we go a little bit over here?
I'm good. Yeah.
Okay.
Yep.
Okay. I mean, when I say a little bit, we're not going to go like half hour over, but I want to, there's so much to dissect and digest in this type of conversation. If you guys are enjoying this and you're getting a lot from it, maybe we do a part 2 because there's still a lot more to cover here. I want to ask a question around paying back investors. I don't know if you guys picked up on it, but I heard that from probably 2 or 3 people. And by the way, Dan and whoever was in your group, apologies, I didn't get a chance to source your questions, but I got it here. When it comes around to having confidence that you're going to be able to pay, did he go Matrix on us there with the background? So Kenny, Andrew, I got sidetracked when I saw Keanu Reeves over there. when it comes down to having the confidence that you're going to be able to hit your projections and pay back your investors, how do you not let that stop you? Because we do the best we can when it comes to underwriting these deals, when it comes to due diligence, when it comes to, putting together our plan. But at the end of the day, until you get into it, you're not going to fully know. So what gives you guys the confidence that if you tell an investor, hey, this is the return you're going to get, that's the return they're going to get, essentially, right?
Well, I think one is I'm never going to tell an investor this is the return you're going to get. I'm going to present it as, hey, this is our projections, and I'm going to, if it's a deal that I have investors in, I'm going to be a lot more conservative than if it was just my own deal. So I'm going to run a lot more of the worst case scenario type situations. I was sharing in my group the difference between a speculation and an investment is the safety of the principal. Speculation, you could lose all your money. In investment, you would hope that the principal is safe, even if you have upside of making a return, but you're not going to lose your money. And so I want to position my investors so that what they invest is secure and it gives them an opportunity to earn that return. But I think, a lot of that's done in due diligence and trying to be conservative. Don't base your projections of their returns on the best case scenario. Base it on the middle of the road. Like, hey, this is, and you can give them a range and just to, prime the pump of, hey, this is kind of the range of where we're shooting to get. And then the other thing too is to emphasize, like, this is an investment. Like, I don't know the future. You don't know the future. It's certainly, these are the reasons why I like it as an investment. These are the value add things that we're going to do. This is the plan. But in the end, it's an investment. And so the people that you're getting money from, you need to make sure that they understand that it's an investment. And there's always risk in an investment. There's no ability to make money if there's not risk. But the biggest key along the way is communication. To communicate, over communicate. If you're communicating, even if the deal is going south and, hey, like, we just had 20 move outs this month and we're, this is what we're doing about it, but that's going to affect our bottom line and our ability to pay out and the pro forma or whatever. But communicating resets expectations and gives investors that they know what's going on along the way. If it's a black hole of information, they're going to fill that with worst case scenario and I just lost all my money and they'll be all over you. But just the communication is huge.
Yeah. I think there's a quote out there, I'm going to butcher it. It's like, bad news needs to travel the fastest and good news can wait, or something like that. If you're an operator and you go in the dark and then and bad news comes out, you lose a lot of confidence and credibility. So just obviously over communicate, especially when things are going bad, and just be consistent about it. Because if you're inconsistent, that leaves doubt. And generally people's minds won't say, Andrew forgot to send me his monthly email. I wonder if something great is going on. They're going to say, what happened? He doesn't want to tell me. He's waiting or delaying it, right? So be consistent about what you can do. And as Andrew closed it out with, every deal has risk. You invest in the market, you invest in real estate deals, storage deal, whatever it is, oil and gas, you're going to have risk. You're just being a good steward of your capital and trying to put it in the best position that you can to eliminate that risk and get paid appropriately for any risk that you have.
Yeah.
And you can never be 100% certain, but you can dot every I, cross every T, and put the maximum effort you can into that deal, whether it's good or bad.
That's right. Dan, I think your question that you dropped in the chat kind of ties in to this part of the conversation. If you just want to unmute yourself and ask it, and then Kenny, Andrew, I'll let you guys go to town on it.
Yeah, definitely. It does tie in. So I feel like I have a limiting belief that any storage facility I buy is actually going to be successful and that I'll actually be able to do the value add things that, we learn about, and it's great on paper, but then when it becomes real, it's like, I kind of feel like I have to protect myself away from it because it's this big, scary thing that I've never done before. And then how do I know I'm going to get I know there's no way to know, but we'll get our investors' capital back, let alone a return on it, let alone the projected returns on it, that the target returns.
Andrew, you want to go first?
Sure. Uh, yeah, I mean, I think that it comes down to trusting the process to some degree. Like you're not the first person to do this. And so seeing the process, and like you said, you talk about all the value add, you should be able to say pretty quickly any given deal, these are the 3 or 4 bullet points that I like about this deal. This is, where the value is here. And your confidence in the deal is your confidence in being able to pull those different levers and not necessarily have all your eggs in one basket of, this is the only way to raise the value here. But it's also trusting your research. I mean, trusting, I've done the market research. I know that market rates are double what these rates are. And so, it's you're going to hit that being able to just trust the process of, when you send out your first rent raise letters, I guarantee you're going to have, anxiety over people moving out. No matter how many people have told you storage tenants are sticky and you're going to have some people move out, but you're not going to have 100% of the people move out. But I guarantee the first letter you send out, you're probably going to have that thought come through your head. What if everybody moves out? It's just one of those things that being able to borrow on the confidence of others and trust your own due diligence in what gave you confidence to buy the deal in the first place.
Yeah, I would echo what Andrew said. At some point, you just got to step up to the plate and swing the bat, right? You can over prepare and over analyze, but at some point, you got to take action. And sometimes action is the solution, right? It's just going for it. Do your homework, dot every I that you can think of, cross every T, get opinions from other people, and everything is still kind of checking out, then swing the bat and go to work, right? That's all I can say.
Yeah.
Yep. That's good.
Yeah. I don't know what else to add to that other than the fact of, I think, trust. You've done the work, you've invested in yourself, you've put time and energy into this. Trust yourself that you've gone through the process and that the reasons you believe this is a good deal makes it a good deal. And then that's why I always share, underwrite these deals on a likely scenario, best case and worst case. And I always ask myself, okay, if I don't hit my likely and I can't achieve my best and the worst case scenario happens, what is my plan of action? And so thinking through your process and what you're going to do to mitigate for the risk and the worst case scenario gives me confidence that if it were to happen, I've already thought through what my next steps are.
Yeah, that's good.
You're gonna be nervous, right? Even the last deal I bought, I overpaid a little bit, and I knew it, and I was a little nervous going into it. But I was like, you know what? All these things are aligning that I just got to trust it, and it worked out. But I'll be honest, I was a little nervous about it. Like, man, what am I getting into? And then I went back to the worst case scenario. I got into it. Worst case scenario is I didn't make any money, but I didn't lose money on the deal, and I learned a lesson because there was a slight risk that I tweaked something in my underwriting that I don't normally do, and I did it on this deal, and I had some good reasons for it. And then I just looked at the worst case scenario, and I was like, you know what? I just kept bouncing up against that as I'll just sell the deal and not make any money off it.
Yeah. Then your fear, your concern, you're not alone. Like I'm not going to say it doesn't exist, but I don't know very many people that buy an asset like this and don't have some level of, it's like, yeah, you're putting yourself out there and with good reason, man. Like, I think that's a healthy, I don't want to call it fear. That's a healthy feeling in your belly, right? That's going to help you show up. That's going to help you be diligent through the process. That's going to help you over communicate with your investors and lenders. But trust that, to Kenny's point, I think I even quoted him. What was it? At some point, action is the solution. Like, you're never going to buy a facility unless you put yourself out there and buy the facility. Now, you don't want to just do it on a whim, but that's why we're talking about trusting the process. And that fear of everybody moving out, like you're going to probably be like, soil your pants when you go to send the first, like, hey, new ownership, here's a rent raise. You're going to be like, everybody's going to leave the facility. Look, I don't have a crystal ball. I can't bet my life on it. I've never heard of that happening. Right. So it's a relatively forgiving business. Would you say that that's fair to say? It's a slow moving, slow paced business. Like, it's hard to really, really, really mess things up. I'm not saying it's not possible. I'm saying you know.
Yeah, I think especially if you're buying a deal now, 2021 may be a different story. People got a little, kind of crazy on deals. But now if you're buying a pretty decent deal now in the environment that we're in, I think there's going to be a lot of tailwinds, whether it's interest rates or, continued demand for storage. Don't quote me on this. I'm not an attorney. This isn't legal advice. You're in a generally a slightly safer place than, maybe it was a few years ago. And remind yourself, we're doing something here in storage that is unconventional, right? We're trying to leave W-2 jobs, corporate environments. If this was easy and there was no risk, everyone would be out there doing it, right? We're trying to do something against the grain. There's going to be some risk. We're going to prepare ourselves. You're in communities like this. So, I had that conversation with someone this morning, like, look, this is what we're doing. There's high rewards and high payoff. We just got to be calculated on what we do and how we do it.
All right, if you have made it this far, you now have the strategies, the insights, the mindset shifts needed to get your first self-storage deal or your next. But look, let's be real. Information is one thing and it's important, but actually applying it is what's going to give you the results that you're after. So if you are serious about finding your next storage deal, understanding how to fund it, how to put the deal together, and ultimately just buy your first or your next storage facility, I want to personally help you. Click the link in the description below to book a free strategy call. Now, this is not for everybody, but if you are committed, if you are serious about getting involved in storage and buying your next facility, go ahead and click the link in the description below. We'll schedule a strategy call. I will talk to you then. And look, I want to encourage you to continue to watch the videos I am putting out on a consistent basis about storage. But if you want to fast track your results, if you want to be a part of the right community, click the link in the description below. I look forward to connecting with you and I will see you on the next one.